before we get into the holidays. And it's a big week. We have the Fed. I think it's a big deal. In fact, I'm looking to fade the Fed, depending upon which direction the market reacts to what they say, and it's mainly going to be in the presser. But every once in a while, you have to look at things a little longer term. And you guys know I've been shorting the yen because I'm looking for lower yields. And I looked at this on the TLT, and we're going to be higher today. It's very important that it digs its heel in and holds this low. That's 89. We take out 89, we're looking at 85. And if we take out 85, we're looking at this, about 72, which no one's talking about anything like this happening. Um, it would actually be like a sovereign debt crisis being handed over to a new administration when they come in, if the bonds break down here. Now, the bullish argument is the MOVE index, that there is no stress in the bond market. That's why the MOVE is just sitting at the lows. And so people interpret that as bullish, that there was no stress. Therefore, any sell off was probably artificial, and we're going to continue. And I won't argue with that if we start closing back over this 93.5 level, which we're about 3 points away. So it needs to arrest this decline by closing up here. Otherwise, we're going to be breaking down and we're going to have sharply higher yields. Okay. So, um, you know, just think about how much higher the dollar could go if bond yields are going to do this. And it's more on the long end that'll suffer than the short end. So I just wanted to show that here's your bear case. I don't think any of the markets are going to like it, although I've seen disintermediation before, and it was in 87 when the bonds kept crashing and the market kept going up. That was during a phase when the dollar was getting weaker, not stronger. And if the dollar is doing better, I mean, let me just let me propose something to you guys. Okay. So what if this breakout holds, right? And it's giving us a signal of at least the width of this formation. So, I mean, you go up to 107.30 and par 15, that's 715 over this. It gives you 114 back at the old highs. This breakout, just a measured move of this move. So, I'm just I'm thinking this is 4, this is 5. And, we're going to peak. I've been talking 109 for a while. So that's in front of my head. But, I just want to say that we can't call the dollar in a bear market until we start closing under the low that we were live on a week or so ago at the 105.40 level. It was right here. Let me fix this. Let me know what you think of the bond count. So anyway, it was here. We were live. So, to me, it still looks like we're going to, take out this high, head towards 109. But you could be taking partials. In fact, here we are from this same day. The euro was a short. That was here. You could be taking partials just in case we get some type of rally back towards 106 again. It's possible. Cable, you're short from when we took out the moving average right here this day. So say you got the worst fill that day was 27.20. So, you still have 70 pips. I'm still looking for 103 here, just like in euro. I'm looking for 102. Cable actually looks weaker to me. I pointed it out with what euro pound did, and I think this reversal is going to hold. There's going to be a break here but I think it's going to put in a higher low. Okay, well, one thing I'll be looking for is when the euro gets down into the 102 level and we're not making new lows in euro pound, that's going to be a very strong tell for me. So that's what we have going in currencies. Japanese yen, stubborn. Got out, had one day where I probed, took partials, protected, and got stopped out. And I keep looking at the bond chart and saying, why do I need to be a hero in front of the Fed? And you have the BOJ today. So we're into some resistance. I actually have a small short on, small, leverage small. Posted it in the room, down about 40 pips already, risking another 60. See what happens here. Basically, it looks to me like you can't really get negative US dollar yen. This rally carried much further than I thought it would. Down here, I said, 52, 53. I wasn't looking for 54. So, what you can do is just wait for it closes back under this level, 52.80, and then 52. If you don't want to try and top pick and have something out there that you may even sell more to try and dance around it, because I do think that we're getting a short-term peak in the 10-year yield, which actually just went to fill a gap. And, I wouldn't be surprised to see us retest 415 again before we head higher, some type of A, B, C, flat, and then go. Natural gas had that 2 drive, so I'd get ready to buy the break. And then the trade I'm looking for, you guys already know I'm, like short Nvidia. What's it doing to me today? Oh, look at that. With the market smoking, I've got a breakdown in Nvidia, everyone. Celebrate with me. I shorted the one was the right one. Anyway, I'll leave it on this note. I think I have a breakdown, but it's early in the day. We'll see if it could negate it, but this move measures to 112, and I've been talking about it on different interviews and on Twitter and here on streams since this day, the day after earnings, where they cleaned out all the shorts. So then I got in with a little bounce here, and then I put some on a little early here, and I'm just sitting with my positions, and looks good. Anyway, see you in the room. I'll be here with Mike tomorrow. Um, Again, it's be some big plays on the short side of the dollar coming up, but not yet. 109, I think, has some destiny in it in the Dixie, and 123 or so cable, 102 and a half, 102 euro. Okay, everyone have a great day. Don't just count your pips, count your blessings. See, they're trying to reverse in the video already. And see you tomorrow with Mike at 11 a.m. EST. It'll be time for Mike and me. Adios.